Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
But when we look at analyzing the price action itself, the MACD becomes a very effective way of establishing and identifying a particular trend that's in place, not only just in place, but that may in fact be coming to an end. MACD stands for Moving Average, Convergence, and Divergence. And the idea is that it really looks to identify overbought and oversold conditions, as well as looking at convergence and divergence between different oscillators, which warns of possible changes. So we can use this tool as almost a contrarian indicator as well to give us a bit of a heads up before the trend even changes direction, that there's a slowdown in the strength of the trend, and that we may want to step away from the position and lock in some profits. Now, the most common numbers used for your MACD is essentially 12 and 26, and really what that particular component of the MACD equation is doing is calculating the last 12 bars and the last 26 bars, adding them together, dividing them by 2, and plotting a line. And what happens is there's a second line that's added in, which is known as the signal line, and that's usually a 9-day. In this case, we'll say 9-day, but it would be a 9-bar moving average, and that helps identify a particular entry and exit opportunities. So let's take another look at our price charts here, and I just kind of want to pull things together here with respect to what we're looking at now. Here's a shot of the BPX, which is of course your U.S. dollar versus the British pound, and what I've done here is I've plotted on our MACD, and you can see down here that we're looking at a setting of 12.26.9, and you can really see that as the pair value trends higher, you'll notice that your 9-bar line, which is your blue line here, is trending above your slower moving line, which is your red line. And as the trend is under some pressure, you'll notice that you have your blue line cross below your red line. So in other words, the shorter term price action is beginning to drop below the longer term trend, suggesting that it's an appropriate time to, number one, if you're long this particular pair value, to maybe lock in some profits, but number two, perhaps step back and look at the possibility that there may be an opportunity to go short or buy some put options. A couple of things that I want you guys to notice here. First of all, you can see that if we look at it from a trend perspective, you guys will notice here that if we just take the last couple of months here, that we've been in a fairly significant uptrend. And the idea is that as this trend line becomes somewhat threatened, then it's an appropriate time to maybe look at again, either locking in profits or changing your your directional view, and perhaps looking to buy some put options. The other thing that I would have you look at is, and we've already discussed some of this already with respect to identifying support and resistance levels, is the fact that right in along here, you can see that we have the BPX pair value testing a high on a couple of occasions, but ultimately not being able to break any higher than that. So you have a number of things taking place in your price chart, in your pair value chart already, without even looking at your lower indicators, suggesting that it might be appropriate to stand aside from being long or look for an opportunity to go short or buy some put options. But what I would have you recognize as well is, if we drop down and we take a look at the MACD, there's a couple of interesting things happening, and it might be a little challenging here for me right now to have you guys identify this, but you'll notice how on this high right in here, this first high that took place, you'll notice that your histogram here was actually extended quite high. So what it's showing you really, what that histogram is measuring is the distance between these two lines, and it's showing you that there's quite a bit of momentum in this move as the pair value makes a play for that upper price level. What's interesting, and this is the way we can use this as a contrarian indicator, is that on that second test right up in here, you can see that that momentum is quite a bit lower. And so this is where that idea of divergence takes place. So before we actually even have a trend entry established, we can see here that if we draw a line down here on our MACD histogram, that's essentially showing us that while the market was making a play to move higher here, the momentum was in fact slowing down. Now, right away, we have a couple of things before, again, this MACD crosses over, suggesting that it's an appropriate time to step aside from a long position or maybe consider some put options. The next thing that we want to look at, of course, is this crossover of our MACD, because right there, it's essentially showing us that now the shorter-term price action is starting to drop lower than the longer-term trend that's been in place. So that's a sign, as we saw back in here, that there's a change in direction. And the next thing that we want to look at is we want to be able to look at this level right in here. So there's this lower sort of what we would refer to as a support level. And ultimately, as the market drops or as the pair value drops below this level in here, we can establish an opportunity by buying some put options, and then we would move down and establish some targets based on previous support and resistance levels. So the idea is again, it doesn't matter where you look to establish your directional bias, whether you start with a MACD crossover, whether you start with looking at divergence in the histogram compared to what's taking place up in the price action, whether or not you see a test of a resistance level or a break of a trend line. The fact is, you start with one and you build a case that lends credibility to even further to that particular directional bias, and when everything lines up, it's an appropriate time to step in and take advantage of that opportunity. Now, at this point, the BPX, I believe, closed around 65.56, so we're basically back down in this level right in here, suggesting that we've had a break of the support level. So we'll have to step back and see how that plays out over the next little while. But the idea is all of this analysis can be done well before that takes place, giving you ample time to go in and look for the appropriate option strategy or option contracts to utilize to participate. This doesn't have to be done in a split second, and you have to make your decisions right away. In fact, before any trade would be taken, you would already have your entry established. You would already have your targets mapped out, and you would know what you'd be doing in the case of this pair value turning around and heading in the opposite direction from what you anticipated.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.